Hi guys, welcome back to my channel. This is the market analysis for 19th December. On the weekly, we can see that price traded to this level of supply and demand, the 22.5 level, and rejected it. Let's go to the daily. You can see that here are the levels of structure. Here, this is the previous high, high low, current high. You can see that price came up to this $24 supply and demand level and rejected it. However, when it came down, this is on the daily chart, it traded below. It formed an engulfing candlestick, traded below to fill out this imbalance so that we can even clear it. This daily imbalance came to this 22.5 level and rejected it. On the 4-hour, it traded below, came and took out this sell side liquidity here, just touched it, seeing the accuracy of the market, and now it rejected upwards. Since structure has been maintained as bullish, you can draw our fibs out, and you can see price rejected the 61% of the fibs. So on the hourly, you can see that here price traded above this level, which was a level of buy side liquidity. And also on the 15-minute, we can say that price had a change of character. That's a break of structure on the lower time frame. So now we are looking to buy this market because that's the overall trend. Now if we draw fibs out, you can see there, this is our entry zone. Here, let me mark it here. Then we expect price to retrace past this low here. This is sell side liquidity for the market to gain adequate volume to travel higher. So let's draw out our Asian range. So we have a guide to our entries. Okay, so this is the Asian range, or is the midpoint. It's mostly bullish. So the midpoint of this Asian range is this price over here. And on the 15-minute structure, it pushed up, traced, came down, traded higher. Okay. So I'm expecting price to trade below this level here, below the Asian range, come to this area of our fibs, and then this green line is also the previous day's low, so it's an area with a lot of liquidity. On gold, when we go to the weekly, we can see that price is still bullish, came down, traded above the 1785 level, pushed up, closed above it, retraced, rejected, traded higher, tried to trade below, it was unable to. So we're still bullish. On the daily, we can see that price came up, traded below, had an expansion to the upside, had a retracement, and then it took out this sell side liquidity here, and then rejected upwards. Structure has been maintained as bullish. The only reason I'd see to sell is to fill out this imbalance here. On the 4-hour, structure is still maintained as bullish. On the hourly, this buy side liquidity was taken, price traded above this level. There was this consolidation here, price traded above it. So since my overall bias is bullish, I'd wait for a retracement to the top of this consolidation, because we can see here also on the hourly, you can see here there's a break of structure. At this point, So structure is now bullish. So I'd expect price to retrace, draw fibs, price to retrace to this 1785 level, which coincides with the 50% of the fibs, so that I can take a long on gold. Let's mark the midpoint of this Asian range over here. So what I expect is for price to trade below here to get adequate volume to continue the move up. So let's see how it will play out. If you like the content, like, share, subscribe, and stay tuned for more daily analysis for silver and gold.